Ladies and gents, Professor Meatball just woke up to tell you should be very afraid for the hedge funds. The hedge funds are coming to you hot and heavy with their manipulative tactics this week because they are afraid and they know that we know. We know that there's two ways to skin a cat, two ways to cause that squeeze to start, right? Either the gamma squeeze, the mix squeeze, or the mother of all short squeezes. Either way, what you need to do is follow this video to the end to understand exactly what user Cryan is going to talk about in terms of T plus 35 and T plus 21 crossing over and the regulations in place, and be able to understand why this video needs to hit 1,200 likes for the message to go out to as many apes as possible, because YouTube sees you like it and then they want to push it out to as many other Moon Platoon members as well. So thank you guys. Comment out which like you are and let's get going. There are two ways to skin a cat. One, cause the price of AMC or GME to skyrocket. Let me use a different color so you guys can see how much I mean it. Last week, AMC and GME were doing just that. On Thursday, AMC got the go-ahead from Adam Aron that the at-the-market offering was complete, and they had $500 million ready at the ready to make their business better. So once that band-aid was ripped off, the price action soared 35% that day and hovered at the end of the day around like 15 to 20 some percent. Now that said, that was on the way for AMC to have an 8-day track of increasing prices and month over month as well. But now, after the crypto market crashed from Chinese messages that they will not allow crypto, the rest of the market followed suit. And now that the crypto market has bounced, we don't see AMC and GME quite yet making up the gap in money in the actual price action. So we're going to have to go with plan B. We'll do it ourselves. Let me do it with blue this time. Have the requirements for the margin call increase in terms of how easy it is to margin call a member of the DTCC. The DTCC is that big cartel of money that is just throwing money at each other, basically having a big money pit fight, and now is looking very scared for the risky bets that AMC and GME short sellers are currently in. So they want to make those requirements a little bit easier to satisfy to get margin called, increasing liquidity requirements, making it clear that riskier investments are going to require more money upfront, money that perhaps they don't have. So now that you understand there's two ways to skin a cat, two ways to cause the mother of all short squeezes, let's get started with this article here. And of course, this is going to be in the link in the description below, so make sure you understand Cryan wrote this article. Give them a thumbs up and show them your support. On didn't read, the market is an over-leveraged bomb. The banks have been fighting a liquidity crisis since the end of March due to the government emergency liquidity programs ending. The entire market is hanging on by a thread, and the DTC, ICC, and OCC are preparing for the fallout. This is important for both AMC and GME. Right, the moment that the price surges again, they can cascade defaults to members in all clearing corps and end it in one fell swoop. Snapping. It's coming very soon. So let's just understand exactly what the DTC, ICC, and OCC have in common and what they don't. They're all arms of the DTCC, and DTC stands for works for the stock market, right? ICC is for default swaps, and the OCC are for options. Just different ways to interact with the stock market. So they all operate independently, but they all report up to that one guy that we saw, the guy that was quietly muttering to himself in that congressional hearing, the president of the DTCC. And if you guys want to see that live coverage, go ahead and just search congressional hearing for GME number 3, Andrew Mo, and you'll find that video. Almost everyone is ready for member defaults. You've probably heard the term defaulting member being thrown around today. Basically, it's how to kill a hedge fund. Basically, how to kill one of the members of the DTCC, the money party that has now thrown up on too many couches, that has worn too many lamps as headdresses, and now that risky uncle needs to get out of the party. You might think that all of these rules being passed have nothing to do with GME or AMC, but it deals with the market itself blowing up, which in turn affects the stock. So all three of them passing similar rules is spooky and not a good sign for the market. Let's repeat that. It's spooky, it's unprecedented, and unprecedented things usually follow unprecedented consequences. Prepare for the market nuke. The DTC, ICC, and OCC have passed rules and plans to deal with defaulting members. Basically, how the risky uncle's gambling debt is going to affect the rest of the family. The goody two-shoes mom and dad and little Sally and little Billy all have to deal with this crippling debt that Citadel and Melvin are slowly building for the entire money cartel known as the DTCC. So let's do a quick summary of what has already been passed. DTC 004 is the wind down and auction plan, basically how to take apart a defaulting member. It's already in effect. ICC 005, it's a wind down and auction plan, but for the ICC, it's already in effect. OCC 004, auction plan allows third parties to join in. It's essentially BlackRock. It's in effect. And then 003. That's the shielding plan. So it protects the OCC from paying up too badly by having extra liquidity, not in effect, but the OCC departments of $600 million that was due the morning of May 19th could have supplemented for this. If not, can go into effect any day between now and May 31st. Any time between now and less than 2 weeks from now. So pay attention, because this channel will help you be able to understand when those rules are starting to come into effect and the countdown clock for the destruction of these hedgies. So if you don't, I know a lot of you have already subscribed, but if you haven't clicked that bell button yet, you just don't know what we have in store. 90,000 subscribers, and we're giving away some free swag, including some miniature rockets and the hoodies or shirts or whatever you want to see from the andrewmomoney.com merch store. So as of right now, the OCC approved their auction plan, which could go into effect tomorrow morning. Every single one of them now has some form of rule which allows the defaulting members' assets to be auctioned off. So they're basically collecting different pieces of Exodia, one piece at a time for each part of the market. Key takeaway is that all three of them, the DTC, ICC, and OCC, are ready to pull the plug. The moment a member defaults in any of the three of them, it will cascade to the other clearing corp and cause them to default over there as well. So they needed to set up these guardians. If you guys play Breath of the Wild, you know that you need to be able to get up certain tasks before you actually face Calamity Ganon. Do we need the other rules? You're probably thinking about DTC 005, NSCC 002, 801, and others. And no, from their understanding, GME or AMC does not need these rules to squeeze. Remember, these regulations affect the entire market, not just the AMC or just the GME. There's what 005 and 801 would do. Just a very brief overview because we don't want to spend too much time. We already said that we don't need them. But DTC 005 would avoid another stock from becoming overshorted again. This is making AMC and GME into an opportunity that's once in a lifetime. But it's not necessary for this to turn into a mother of all short squeezes. NSCC 002 and 801 will speed up margin calls for extreme volatile movements like we saw in January and March squeezes. So that is going to be something that is pay up within 1 hour or you're toast kind of mentality, but it is still not something that is entirely necessary. And then finally, a wild rule called ICC 008, which is in effect that performs hypothetical margin calculations based on market movements. So the more the market strains itself and becomes volatile, like the action we saw last Thursday, the crazier the requirements are. Remember number 2, requirements for the margin squeeze. But the more the market is like today, where we saw AMC only get 60 million volume, which is how much volume it had during the 1 hour period last Thursday, and GME very similar, only having 2.5 million. Yeah, that's this is the changes in the market that the DTCC wants to be able to have dynamically affect the underlying risk involved. Okay, Hoopy is close to hitting the fan. Imagine how bad leverage must have been abused by the large firms, which are still standing today. So we talked about Archegos, we talked about that as the very first provable margin call that we had seen in this year's saga. If you guys haven't seen that, just search Archegos Andrew Mo. You'll find the first thing that comes up. Zero Hedge says the real story today, reverse repo usage just surpassed COVID crash highs. We are effectively out of the repo market collateral. I also like the fact that his profile picture is very financial as well. No shade, but this is good to have as many unlikely heroes as possible in this. Okay, So a little bit about reverse repos here and when they started showing up. January 29th, right, the January squeeze, and March 11th, the March gamma squeeze here. Fed says extending 4 emergency liquidity programs to March 31st, 2021. So here is the steps that we are taking. If you haven't understood about reverse repos at all, let's go one at a time. Bank 1 enters a reverse repo agreement with Bank B. Bank A sells, I said Bank 1, but Bank A sells assets to Bank B. Bank A agrees to buy back the assets from Bank B at a higher price at the end of the day with 0% interest. This keeps inflating and creating a larger liquidity bomb requiring larger repo amounts each time. Because despite 0% interest, it's a repurchase agreement at a higher price. So we've talked about repurchase agreements as the new catalyst that the mortgage-backed securities were, the subprime mortgage loans back in 2008. It seems like some people are still not really getting the real picture. This is 2008, but more visible, more than just the Michael Burrys of the world can see that we are in some deep, deep trouble. So that is what we are going to be able to put eggs directly on our faces, and especially the eggs on the Congress people that ignore this impending crash here. T+35 and T+21 crossover event of the meme stocks. Now we finally got to what exactly is that vocabulary, right? We talked about FTD looping. The FTDs are the results of not being able to locate someone for your counterfeit short, and it's just the after effect after being able to get away scot-free with printing your own share, printing your own short, and then giving it to someone without actually having to locate someone to give that short to. But they have different expiration cycles. And this current speculation is that we are likely looking at T+35 and T+21 intersecting soon. Think about cicadas. If you're from the Midwest or from most of the world that has cicadas, you have some years where there's almost no cicadas at all, but some years are super swarms where multiple staggered life cycles start intersecting. So this is coming up next week. Okay, this is some visualization of that, of what I just mentioned. This is the final part. I don't like how he starts, call me a tinfoil hat wearer, but it sure as heck feels like DTC, ICC, and OCC planned this all out. The flash crashes, everything in order to get the nuke fallout plans in place. So what I will say is that I might have to call him a tinfoil hat wearer for saying that a government body, or not a quasi-government body because DTCC is a private body, but they don't have the ability to control as nearly as much as we think they do. So we're giving them a little bit too much credit, but there are major stars aligning at the end of the day. So thank you, user Korean, for being able to put this research together. Make sure that you guys click in the description below for their research. Thank you those of you who are patient with me while I get your name up here. If you have pressed that Patreon link down in the description below, or press that join button next to the subscribe button, you'll find your names up here. One of the final things I will say is that the trading app that I was using is called Webull. You can get your 2 free stocks there by pressing the link in the description below. And if you guys want to take advantage of the rebounding crypto market, $250 of Bitcoin are awaiting you at BlockFi. And finally, if you want to make swing trading easy, my favorite tool for beginners and experts alike is called Cheat Code Algorithm. It fits directly on a free software called TradingView, but of course the cheat code itself is not free, so a fair warning there. For now, but not for forever. Peace.